Hey everyone! I tried doing a video at a home earlier and everything just went wrong. I made a small post about it in the group. I just came to my favorite spot in the woods and I thought maybe I'll give it a shot here. So we'll see how the voice and everything comes out. If it's good enough, then I'll put this on the group. So today's video was going to be about investments, and one of the questions I received is, where do I put my money in? Where do I invest it? And there are a couple of rules for investment. One, you have to look at how safe or how unsafe the investment is. So you can rank them in three categories: safest, middle, and then the lowest, which is volatile. So anything can happen any minute. You may lose all the money or you may make thousands within the same amount of time. The safest would be something like CD. So you loan the money to the bank and they're going to give you an interest, 2.5% or 3%. The rates are really low at this time. And at the end of 6 months or a year, whatever the term is, they're going to keep your money and then pay you the interest on it, and you get your money plus the interest back. Another safe kind of bet is bonds. So that's mostly from the government. Government will issue bonds, you purchase them, and then they also give you an interest on it, and they pay you that amount at the end of the term whenever you want to withdraw it, and you have that. Cash is another form, but it's not necessarily the best option, because with just keeping cash, you end up losing money. So if you just want to keep some cash in a year, that may be worth $98. In another 10 years, that may be worth $80. That's because of inflation. Money loses its value. So I try to keep around 90 days or 3 months of cash in case of emergency fund. So that's my emergency fund. If something goes wrong, I can use it. But more over that, it's better to have the money invested. The middle ground is what they call mutual funds. That's where you're buying a bunch of companies together there. So example is S&P 500 index fund. That's basically you're purchasing equity into all the 500 big markets in the US, and that's where you're investing in. And then another would be like total stock index fund. So you're basically investing your money in the total stock market. And so index funds are kind of middle ground. You get higher percentage back on it. You could get 8 to 10%, or in a good market, even higher than that return on it. But the market goes up and down, up and down. So you want to be careful where you invest in based on your age. If you are close to retirement age, a couple of years away from it, you don't want to put all your money in the mutual funds, because if the market is going to be in the low phase over the next couple of years, then you're going to end up losing a lot of money. But if the market is going to be high, then obviously you'll gain. The volatile example, something where you could lose money easily, would be something like Bitcoin. Nobody knows what's going to happen with it yet. It's still out there. And then another thing I would put there is the Forex exchange. That's the currency exchange. And also individual stocks that you purchase that you're not familiar with. So if you haven't done your research and you just purchase into a company just because somebody says it's the next hottest thing, you could lose that money. So be careful that you do your research before you invest your money into anything. So your investment should be based on your age, if you're close to retirement age, how risk averse you are. If you absolutely don't want to lose any money, then how you want to invest. For me, majority of so I keep 3 months of emergency fund as cash. And then after that, it's mainly invested, and mostly is mutual funds or index funds. So my favorite is Vanguard. I go with Vanguard. I have their S&P 500 fund, and then I have their total stock market fund. And the next thing I want to buy is the international stocks, total market as well. I was checking out my 401ks today, and for one of my job, it's invested in Fidelity S&P 500. I am okay with keeping that there for now. That's around 60% of it, and then the other percentages were into, again, Vanguard, medium and small index companies. So I think I'll probably keep that as well. And my other 401k I have is with real estate investment, so real estates that you can buy through the companies. Then I have 529 accounts. That's for my kids' education. I am only doing the amount that I could get deduction for, so that's for my New York income. I get deduction for up to 10K a year, so I'm trying to get some in there just for tax benefit that there is. I would probably do a different account for the kids if I didn't have the tax benefit. We'll discuss what other accounts are available for kids. Anyways, if you want to see where I'm sitting, it's so beautiful. It's like out in the woods. Wow.